Good day, ladies and gentlemen. Today I want to teach you a very simple price action strategy that you can use, and this particular strategy is such that it's very okay for beginners. Okay, I'm not going to be bringing to the table all those complex stuff that actually stress beginners out. Okay, I'm not saying beginners should not go and learn all those things. You need to learn them to be a complete trader. Okay, so you won't be hearing stuff like liquidity sweep, you won't be hearing stuff like breaker block, order block, and all those kind of stuff. No, nothing like that. You're simply using what you can see on your charts, which are candles. Okay, you're focusing on candles. Okay, and we are taking advantage of two specific qualities or two specific characteristics of price action when it comes to this particular strategy. The very first one we're taking advantage of is the fact that when you're looking at a chart, as I have this chart in front of me now, you would notice that it's very difficult for you to have an alternating combination of blue red candles. Okay, like after a blue candle you see a red candle, after a red candle you see a blue candle, after a blue candle you see a red candle. It doesn't really come regularly. It's very difficult for you to find. Most times what you have instead is after a bullish candle you would have a bullish candle. After a bearish candle, the probability that what we follow it will be a bearish candle is very high. What do I mean? Let me show you something. Look at this. This is a bullish candle followed by a bullish candle. Do you see that? Then you add a bearish candle followed by what? A bearish candle. Then you add a bullish candle followed by what? A bullish candle. Then you add a bearish candle. Then this bearish candle is supposed to be followed by a bearish candle, but it was not. Instead, it was followed by a bullish candle. Okay, but that does not last. Okay, it doesn't happen like that for you for a long time. Most times you have the same candles following each other. Okay, as you can see, next we had what? We had a bullish candle followed by a bullish candle followed by a bullish candle followed by a bullish candle. You see, that's the way it is. Okay, then right here we had a bearish candle coming in, then we had a bullish candle alternating, but like I said, such situation does not last. We had a bearish candle followed by a bearish candle followed by a bearish candle. Do you see that? Then a bullish candle came in, then you had a bearish candle followed by a bearish candle. I think the point is clear. I don't need to keep going on and on. So most times when you have a bullish candle, there's high probability you're gonna see another bullish candle. Good. Same applies to the bearish. That's the first thing we are taking advantage of in this strategy. The second thing we are taking advantage of in this strategy is how candles are formed. All candles are not formed this way, but majority of candles are formed this way. What do I mean? If the candle were to be a bullish candle, the very first thing the candle would do most times is to trade downwards. After trading downwards, it flips and moves in the bullish direction. Okay, it flips and moves in the bullish direction, leaving behind a wick under it. That wick it left under it is caused because at first it did what? It traded downwards as though it's going to be a bearish candle. Then it flipped, forming a bullish candle. Sometimes it will move down a bit, leaving you with a small wick above it. Okay, so this is basically how most candles are formed. If it's going to be a bearish candle, it fools people as though it's going to be bullish. It will move up a bit. After moving up a bit, it flips, giving you a bullish body like this. Okay, then it can move up a bit, leaving a wick behind. This is how most candles are formed. Okay, so the theory is more like if a candle flips and becomes bullish, it's gonna close bullish. If a candle flips and becomes bearish, it's going to close bearish. Okay, so knowing that helps you to apply this strategy. So let's get into the strategy. This is what it's about. You need to have a particular candle which will give you a bias. So let's say I'm starting around here. Okay, this is the candle I have. All right, that candle is a bullish candle. So my bias is that the next candle is going to be bullish. So what I'm expecting to see before entering a trade, let me move this a bit to the center. Okay, what I'm expecting to see before I enter a trade is for the next candle. All right, I need price to trade downwards, leaving me a wick. Do you see that wick? Once it has left me with that wick, then it comes up and flips, trying to turn into a bullish candle. Once it has flipped, giving me some bullish color, what I'm going to do is I'll enter my trade and place my stop loss just below the wick. I'll place my stop loss just below this wick, SL, below this wick, and I'll target 1-to-1. Okay, this is like a scalping strategy. I'll target 1-to-1 risk to reward ratio. Get my 1-to-1, I'm out of it. It can give you 1-to-2, it can give you 1-to-1.5, but the take profit is now left for you to decide how you're going to manage your trade. But the assurance is 1-to-1. It surely give you 1-to-1. Okay, so basically that's how it works. In the same sense, you have the same thing happens when you're dealing with a bearish situation. Let's say, look at this candle now. Let me follow through. Look at this candle. You've traded with this candle and you have made money. Now you still want to enter another trade. Good. Since the candle is bullish, you are expecting the next candle to also be bullish. So what you want to see is for price to trade down a bit, flip into becoming a bullish candle. But that did not happen. If you look very well, you would notice that this level is where the candle closed. Okay, so what happened instead is that price traded upwards with the next candle. Now, for it to have traded upwards, it shows that it's going to flip and become a bearish candle. So you are not even supposed to take this trade at all, because it's against your bias, it's against your idea. Hope you understand. So price flipped and became a a bearish candle. Hope you understand that. So now that price has flipped and became a bearish candle, this is a bearish candle. Your bias for the next candle is that it's going to be a bearish candle. So what you want to see is you want to see price move up a bit, then come down and flip into a bearish candle. Then you can enter, place your stop loss just above the wick it's created, target 1-to-1. Do you see that? Hope you're getting the idea. Now, the next candle is a bullish candle. Look at this. It's a bullish candle. So with that bullish candle, I'm expecting the next candle to be bullish. So what I want to see is when the next candle opens, I want to see price trade downwards a bit, then flip, giving me bullish color. Okay, once I see that bullish color coming in, all right, I'll enter the trade. Place your stop loss here below that wick. If the stop loss is not below the wick, price can manipulate and hit your stop loss and still continue in your direction. So that wick is the extreme where you should place your stop loss. Now, let me show you the kind of trade I'm not going to take. Look at this. I will never take this trade. Why? The candle before it is a what? It's a bullish candle, right? Meaning you have a bullish bias, fine. But when price opened, you notice that it moved downwards like this, then flipped to give us that bullish candle. But the problem is, when it flipped and gave us the bullish candle, the wick it created is too big. Okay, so it means I'll be placing my stop loss below this big wick. What if I'm wrong? It means I'm going to take a big loss. But definitely, one thing I like about this strategy is that wherever you enter, let's say from where you enter to where the wick is, it will always pay you 1-to-1. There's no guarantee for 1-to-2. There's no guarantee for 1-to-3. It can give that, but the main guarantee is 1-to-1. Okay, you can see that if it were to be 1-to-1, you would have still taken your profits. All right, so basically that's the way the strategy works. If you have any question, if there's any part of the strategy that is not clear, you can ask me in the comment section. I pride myself as a strategy master. I usually say one thing: you can't be a subscriber of my channel and not have a strategy you are using to milk the market. Okay, so if you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.